Okay, beautiful. Okay, so today's lesson we are going to look at how you can buy from. You can use based on a swing point. So the swing point, so swing highs and swing low, how we can buy and sell. Okay, from the swing points. All right. So whenever we have swing highs and swing lows, when can we buy and when can we sell? And what makes a swing a valid swing? So that will lead us to explaining what we call so now you should take note that I'm beginning to introduce you to a lot of terminologies. Okay, so this will lead us into what we call one of the terminologies that I want you to understand is what we call fair value. Okay, fair value gap. Okay, or what we call a gap. Okay, beautiful. Now let's go. We said that we buy from uh, the highs. So we buy from the lows. Okay, let me use this. So we are buying at the lows. We are buying at the lows, and then we are selling at the highs, right? Okay. Now, so we are buying at these lows. Now, one of my rule is this. Anytime we say that we want to buy from a low, okay, um, there's this consideration that we consider. Okay, anytime you are buying from a low, we put into consideration. So for instance, if I have a chart like this, okay, and price is moving. So for instance, assuming I don't see what is on the right hand side, and I'm at this point, okay, and I want to execute a trade. For instance, I've seen that the market is moving this way. It's a bullish market, okay, because one market has formed a high here, a low, a higher high, a higher low. Then I know that we are in a bullish market. So assuming I want to buy at this point, one of the things that I have to consider in taking my trade here is where you can put your stop loss or where you can put your stop. Okay. Anytime you are taking a trade, one of the main consideration is your stop. Don't execute a trade because you find that it's a good entry. Yes, you are in a bullish market structure, but why are you buying from this point? Yes, you are buying because you believe that the market has reached this level and it can go up. Now, if I'm buying here, first thing, where should I put my stop or where can I put my stop loss? And then the next thing is, where can I take profit? So if I'm buying, you've understood that we have swing lows. Okay, now we have this low and we are in a bullish structure. So for instance, first of all, I saw this swing low and then I saw that there was a high here. Okay, then the next thing I saw was that there was another swing low here and then it formed another high. Obviously, this small action here is telling me that the market is trying to push upwards. Then I have another swing. So let me draw a pattern for you to see what I'm talking about. Where is this? Okay, okay. Oh, where's my disjoint? I'm not seeing my tools. Okay, great. Now, assuming you've seen that market traded from, okay, sorry, let me just take this off. Assuming we've seen that the market traded from this low, okay, came to form this high, and then it formed a low, and then it formed a high. Obviously, what are you seeing now? You are seeing that the market is trying to push further up, right? And then it forms this low, it consolidates around this, but still it goes to form another high. Now, obviously, what you will be waiting for is, okay, now, when we have this structure, market forming higher highs, it's formed the first swing, second swing, then the leg, we have the first, second, and third, and then it forms the third one. In as much as you are seeing a retracement into this side, all that comes to mind is, okay, I'm waiting for a retracement. The retracement could have come to this point and then continued. So a typical example is the retracement could have just come this way and continue. Or it could have even been just here and then it continues. But it dropped down to this point. And it even came a little bit more closer to the previous low. So in executing a trade, and in a bullish market structure, you should always take into consideration that your stop loss is always, if you are buying at the bottom from this point, your stop loss is always at the previous low. So assuming I bought from this point, I noticed that the market came down and I bought from this point. Market came down all the way to this point. I bought from this point. Where do I put my stop loss? I put my stop loss below this low. Then the market goes up. If it goes our direction, where do we take profit? So our first scaling of, or our first point where we take profit is this high. Our first stop loss should be below the previous low, and then our first take profit should be above this high. As easy as that. That is how to trade with a bullish structure. Now, there are more reasons why market will drop and come down all the way to this point. Why didn't the market drop to this point and go up? Why didn't it reverse from this point? Why didn't it come all the way down, a little bit further down before it went up? Why didn't it even reverse from this point? There is a reason. And I'll take my time and take you through why the market will trade to a certain point before it does the reversal. Now, when market reverses to a certain low, much lower, closer to the previous low, and we are in a bullish market, it gives you that more edge, that competitive edge, or it gives you that room to execute a trade with smaller stop. And that gives you more leverage, or gives you more advantage. Okay, that gives you more, how do I put it? That gives you more of an advantage, okay, to execute a trade with a small stop loss. So this is why we are buying at the low. We are buying at the lows, the ones that are much more lower. So for instance, assuming this point was maybe along the swing. So for instance, let me give you a typical example. I've seen the market going down. It goes up this way, trades above the high. Okay, so let's say we are doing this, and then it goes above this, and then it comes down close to the low, goes up, comes down a little, and then it goes up. Do you think it will be more advisable buying from this point? Yes, it may be advisable, but then the reason why buying from here is more risky is that if you buy from here, the next point where you can put your stop loss is below this low, which is very far from where you make your entry. How about this side and this side? If you place your entry here, if you enter a buy trade here, your stop loss is just close to it, which makes you have more leverage for the market. It makes you reduce your risk as well. I hope it's well understood. So we are placing our buy entries, yes, at the lows, but then now your consideration is that place your buy entries at the lows which have smaller stops. Okay, as beautiful as that. So, for instance, when we will go details, and I'll explain to you that you can easily buy from this high in here. Yes, but there's a place you can place your stop maybe somewhere, but this is not for your level. Okay, so now train your eyes to see what I'm showing you, and that will give you minimal risk. Please kindly mute, kindly mute, and then okay. So when we are buying in a bullish market, we are looking for entries that have smaller stops. So anytime you are looking for setups like that, if it doesn't happen, don't take the trade. If the bullish market forms a low which is very far from the previous low, avoid it. You can decide not to take it. The market is always presenting you with plenty of opportunities, and that opportunity will come. So for those of you who are always eager to take trade every now and then, you always be on the losing end. But if you're going to be patient and wait till the market gives you a low which is much more closer to the previous low in a bullish structure, you have a clean trade rather than the low being very far from the previous high and the previous low, sorry. Now, a typical example is what I was trying to show you here. Look at this. This was a previous low. Let me delete everything from the chart. This is a low. This is another low. This is another low. And this is another low. So imagine if you are taking an entry on this low, your stop loss is either somewhere here or here, which is very far from where you're taking the trade. In such a case, you make your risk level higher. Okay, awesome. Now, in a swing, okay, when we have swing highs and swing lows, swing highs and swing lows, swing highs and swing lows, how then do you know whether we are in a bullish structure or a bearish structure? Okay, how will you know? For instance, we are just on this chart, or let's say, let me give you a typical example. A typical example. Okay, let's go back. Let's go back in time. Let's go back in time to this. Or let me change. Let me change the pair we are looking at here. Okay, now watch this. Watch this. I hope you can all see my chart. So I'm going to show you the pattern here. Okay, I'm going to show you the pattern in here. I'm going to show you the pattern in here. Can you see? Can you see? Can you use your own eye to should I say gauge and tell me what pattern you can see showing, for instance, from this point all the way to this point? Can you see a pattern in here? This is a question. Can you all see the pattern in here? Or the market structure we have in here? What type of structure do we have in here? What type of structure do we have in here? I want answers in the chat box. What type of pattern do we have in here? It's a bullish structure. It's a bullish market structure. That's the structure we have in here. Now let me show you how and why we are saying that it's a bullish market structure. Okay, bullish market structure. Thank you. Now let me show you why. It's as easy as you said. It is not anything so wild. Oh, Sorry, there was a little bit of interruption. Okay, so I'm just going to show you the pattern from this point to this high to this low all the way. You can see this low doesn't break this high, so it's not regarded. Okay, so let's say all the way to this high, to this low, and then to this high beautifully. Now the question you ask is, so in as much as we have this kind of bullish movement in here, how then do we know that as price is trading back down, are we not going to wait for it to come closer to this point and then we we buy and continue up, because we know that we are in a bullish structure? But so for instance, you took a trade here expecting it that it should go up. You place your stop below this, and let me show you where you place your stop. So you place your stop loss here, and watch this. Price got here and it did this because you saw this wick rejecting upwards. You thought that it was going to continue the bullish trend. So you place your stop loss here. You make your trade entry here. And what happens the next day? This is a daily candle. Boom. Stop loss hit. Now, in as much as your stop loss has been hit, don't worry, because you are not always going to be correct on the market. In as much as your stop loss has been hit, what does it communicate to you? Because you were in a bullish market and now what you were expecting the bullish market to do, it didn't do it. What happens then? What it means is that the market is shifting structure, or it is shifting. We are in a bullish market structure in as much as we have a swing low, which is a main swing low violated. It makes the structure become shifted to the other direction. So for instance, let me do the drawing for you. For instance, let me go to a place where we don't have any data. So for instance, we have a market moving this way. Okay. Or let's say it moves this way. It continues up, comes down this way, continues up. Normally, we are expecting that when it gets to somewhere around this area, we'll buy for it to continue. Yes, and it does that. We take good profit. Then it comes back again. Now, instead of it coming down to this point and continuing, it doesn't do that, but it continues down this way. In a bullish market structure, we have the market always forms higher lows. Now, watch this. The previous low, which was formed here, and this one, is this lower than this? Is this previous low, the current low that has been formed, is it lower than this one? No, it is not lower. It is not higher, sorry. In a bullish market, we are having market forming higher lows, right? Higher as in we are going up. Let me use a trend to show you that. So it means that the lows that we are forming is continuing going higher. Now watch this. We have a low which has been formed, which is not lower than, or which is not higher than the previous one. It's rather lower. Under which market condition do we have the market forming lower lows? And that is a bearish market. It is the bearish market that forms the lower lows. Apologies. All right. So I'm saying that under which market condition do we have the market forming instead of higher lows? Now we are having a lower low. So now the interpretation is simple. If we are in a bullish condition and then the market shifts structure and then it begins to form lower lows, then we see the market has shifted structure. So watch this. This side, instead of the market continuing from a certain point and continuing higher, it has rather. So here we have what we call a market structure shift. So in a normal market where you have your chart reading, one of the things that will make you understand that the market has changed course is when we have a structure shift. Anytime we have the market shifting structure, it means that we have shifted course either from a bearish market or a bullish market scenario to a bearish market scenario. So in this situation, what you usually see the market doing is that it comes down and then it goes up. And now in a bearish market, we have lower highs. So it begins to form lower highs. Then it continues with the lower lows with lower highs. Then we know that obviously we have shifted course and we are now in a bearish scenario. In as much as this happens, now we'll begin to hunt for highs to enter our sell entry. So in as much as this happens, anytime we have a shift in structure, now we'll begin to go and hunt. We'll wait for markets to go to a certain high without breaking this high. If we have the chance for the market to even be more closer to the previous high, we take a very good entry there, expecting it to now begin to shoot down. You don't need any indicator to tell you that the market has changed course. The market, anything on the market shows you. Now let's go to our chart and then define everything we are saying from the chart. Now let's go. Beautifully, when we go here, market shifted up and it was trading up in a bullish market. Now watch this. When we go here, when we go to this point, we're expecting the market to go back up, but it broke and then it came down. So now what do we have here? We have what we call a shift in structure. So now watch this. We begin to hunt for a point where price will trade up, a high where we can sell from, and then we sold from, and then it just did all this we had to do, and then it traded to this low, which is much lower than this. So we have a lower low, and then price goes up again to form another high in here, and then it is breaking down below this. So price begins to form this form of structure. So as it's going here, in as much as it hasn't broken this high, we are still valid for this trade, and we are looking to seek for more lower prices. So that is how the market works. So today, all I want you to understand is what we call the shift in market structure. If we are in a bullish market structure, and then suddenly you see that one of the lows, the main lows have been breached, not just breached properly with the bodies of the candles sweeping below the lows. Sometimes it can just be the wick of the candle, yes, but there's a full displacement. Usually you would see that there's always a full displacement of the lows with the bodies of the candle, like this one. And then we begin to hunt for the highs, and then we are looking for a shift in structure to a different direction. So immediately it breaks the structure, a bullish structure. Now we begin to look for a point at the highs where we can begin to sell. It comes down. Now when it goes up again, we are not seeking it to break this high. So whichever point of interest above, inside this area, which we can place a sell entry, we make our sell entries, and then the same thing applies to this side. We look for an area of interest, and then we are seeking for more lower prices. So that is how break of market structure works. So this is for a bearish structure. There's a bullish structure then which sought to come to a bearish direction. So now we have to look for another scenario which will show us that the market wants to go from, for instance, we're in a bearish market. We are looking at chart which shows that the market has broken to a bullish structure. Okay, now let me go to my chart and see if we can find something, a beautiful scenario like that. Awesomely, we have one simple one here. So I'll give you an assignment. Your assignment will be that you have to now go to your chart and look for where there's a shift in market structure. So for instance, we have this one. Market move from this high to this low, to this high, to this low, to this high, to this low. And then watch this. Instead of it moving somewhere here and reversing, it doesn't do that, but it breaks the structure to the upside. And then watch this. So we now we're in a bearish structure. Now we are looking for a bullish direction. So now price traces to this point, and then it begins to go back up higher. So this one will make you have very good entries without having to struggle, without having to look for. And now, why did price reverse here? All these things I'll take my time and explain to you one after the other. Now, all I need to understand is understand that when we have structure shifted in this direction, we have what we call market structure shift. Okay. So that I want to leave with you for today. I'll give you an assignment, and the assignment is that go to your chart. I hope you all have the MT5. Go to your chart. Take a snapshot of area where we have a structure shift and send it to me and explain that we're in a bearish market, we're in a bearish market, and the market shifted to a bearish direction. Possibly put a line when you're sending the chart. You can put a line to show me where the market structure shifted or where the market structure shift occurred. Okay. So basically, that is your assignment for today. If you have any other question, you can send it to me on WhatsApp, and then I will take it from there. Okay. So until we meet again, I wish you all the best. Have the best of the evening. Okay. All right. See you all.